Hello, today is November 4th, 2017. My last call said I was looking for a pattern with an early high and a tendency to rally into the close. That was the pattern we got. Monday's pattern, I believe, will have an early high, a middle of the day high, and a late high. And in general, each one tends either to be higher than the one preceding it or lower than the one preceding it. He talked about the three-leg whipsaw taking us to a new high. We got a new high by 2 cents. The leg up should be longer than this leg down, would have taken us to about 25.90. We came within 2 points, and I've seen it come within 1 or 2 points before, so we don't really have to go any higher than we did. MEJT says this is a false rally, gives us a target of 2580.49, most likely to print by early Tuesday, and unless we gap up and take out this high, gap up smartly, take out this high, that's my call. But we did get an ultimate sell signal too. We got just the minimum. Almost always we get more than the minimum, so almost always we should undercut this bar's low, which I'm trying to find, and doesn't want to tell me what it is. Well, that'll be a mystery. It's this bar right over here. Well, let's take a look at the short-term pattern first, and then take a look at the long-term pattern. Well, November 3rd was my long-term call for a change in trend. It could work. It's too soon to be certain at this time. We did hit a new high and promptly reversed. We also rallied all day long and could not close over the middle of the day high. It's a negative pattern unless we gap up and promptly take out this high at Monday's open. If the market's going higher, that really shouldn't be too hard to do. Friday's trends tend not to be reversed so easily when the market reopens Monday. So if the bull market's going to continue, I would think we would gap up and take out this high very promptly. It would be quite a different story if we gapped down. I think that would put this number into play. I think it would print by Tuesday's early trade. So I think the open on Monday is going to be critical. Well, there are any number of places where this market could top out. I actually like January around 26.66, but let's make the case for it topping out here since I have my number, my date. Well, here was the count we had, and we had nice Fibonacci relationships at the late October high. We've since gone over that, so we'd have to have some kind of an irregular flat, expanded flat, to make that work. This was the attempt we had November 1st. Since we've gone over this, that won't work anymore. If this high holds, there's actually a very beautiful ABC pattern with A equal to C, and even the smaller time frames have some very nice Fibonacci relationship with this being an ABC with C equal to A. If this high holds, it's all very pretty, but of course it isn't the only way to count it. You can come back over here, just change this, and if that's A and that's B, C equals A, right at Friday's high. You can even go back further than that. You can move the end of gray A from here just a few points over to here. Then A and C have a nice fib relationship, and right at the high we have brown C equal to twice brown A. It's very pretty if we top out here. So, Monday we think the open's going to be critical. There are any number of prices at which one could justify a top. This is one of them, and if we start to drop with conviction and authority, I think you'd have to believe it. Absent such a drop happening, we'll just say that the Fed whipsaw has effectively been completed. Usually, since the first move after the announcement was up, you'd anticipate the market going higher. Since this was an all-day rally, you'd anticipate the market going higher. Any number of reasons to anticipate the market gapping up and taking out this high. So if that does not happen, if instead we gap it down, and particularly if we gap down, take out this low, it could be the sign of this leg ending. Monday's open's critical, and that's today's call.